Recession. The word's being tossed around again. Are we going to see a recession here in the near future? And how is it going to affect the real estate market? Let's go ahead and get to that right after this. Hi there, everybody. Mike Petras here, your star realtor of Star and the Treasure Valley, back with another educational video to where we're going to go ahead and discuss always the biggest word that seems to loom the real estate industry since the Great Recession, and that term is recession. So we're going to go ahead and historically look over the last 40 years as to how recessions have really affected the real estate industry and what really we're going to expect if a new recession does pop up. So let's go ahead, let's get into that information. We'll start off with the definition first and really kind of break it down and see what could happen. So let's go ahead and let's start off with the definition of a recession basically in itself, and really just kind of a quick tidbit, of how Wikipedia goes ahead and defines this. They're basically just saying that the working definition of a recession is 2 consecutive quarters of negative economic growth as measured by a country's gross domestic product, or GDP, to break it down. Now, of course, this isn't the only indicator of, what's going to lead into a recession. There literally are many indicators that people look at in terms of what's really leading into a recession, or what's going to derive a recession coming up. If we basically kind of take a look at just the overall definition that Wikipedia is giving us, is that term of the recession really kind of applicable to what we're going to be seeing here in the near future. If we take a look at just the projections of where the quarterly GDP is going to be looking at in this definition, if we look here in Q1 of 2022, the projection was at 1.5, definitely down from the 6.9 that we saw in Q4 projection of 2021. And if we're looking into Q2 of 2022, the projections are coming down. So if you want to take the projections and really kind of roll with them, well, then kind of the definition of what Wikipedia is saying is a very basic is in play here. But one of the things that is definitely always an indicator and seems to have been really for every recession that has happened in the last 75 years is when, if you look at that history, there's never been a moment when inflation was above 4% and unemployment was below 5%. When a recession did not happen within the next 2 years, according to Summers. That seems to be one of the most prolific indicators that a recession is right around the corner. So if we take a look, of course, at where our current inflation rates are, we're looking at 8.54%, and that is going to be on the rise. I almost guarantee it's going to continue to rise. And of course, the interest rates are going to reflect that if you're looking at the real estate industry, which we've all noticed. Basically, if you've been paying attention to all my videos and you are subscribed, you have noticed that the overall mortgage rates, or the overall interest rates, have almost jumped 2 points since the beginning of the year, and they're anticipated to continue to go up. But regardless of that, again, inflation is sitting at 8.54%, and our unemployment rate is below the 5%, as the statement says. So can we really see a recession coming within the next 2 years, as the previous article had said? Very maybe likely. Another thing is when yields on 2-year treasury notes surpass those on 10-year securities. And right now they are doing that. It's what's called as a yield curve inversion. And that happens when the Federal Reserve is driving up short-term interest rates to levels that market participants don't think will be sustainable for the long run, or that will cause the economy to weaken over time. They kind of sometimes make a joke out of it. And you can see here that Ramp Capital did and said, happy yield inversion to those who celebrate. Okay, celebrate what? Okay, an indicator that a recession is going to be right around the corner. But inversions, they do have a longstanding record of, arguing the downturns. One historical, study here showed that some of the 85% of the recessions over the last 158 years were associated with short-term interest rates moving higher than long-term rates. But nowadays, many experts say the world has changed and the gauge just isn't relevant anymore. So a question, again, the question is how is the reliability to this particular indicator? But as we see kind of through these three indications, we can see that the quarterly GDP from the projections seem to be coming down. We do see that unemployment is below 5%, and the inflation rate is above 4%, which is usually a strong indicator of that. And then if we're looking here at our yields, we're seeing that that's also indicating that maybe a recession is going to be right around the corner. So are we going to expect one to come through? Yeah, maybe. But again, historically, how does that really affect the real estate market? And you'd really kind of be shocked, because most people do anticipate and think that the 2008 crash of what happened during that recession is usually the indicator of what happens in real estate home prices as recessions occur. But let's go ahead and let's take a look at that. Let's go ahead and take a look at the housing price index of the United States over the last 40 years. If we're taking a look at this, you can see that it's coming up, and of course it comes down. But let's go ahead and let's break that down a little bit here and talk about what were the last recessions that we really did see over the last 40 years. Of course, we had one in 1980 that lasted for 6 months, 1981 to 1982 that lasted for 1 year, 4 months, etc. 1990s, early 2000s, and then the Great Recession in itself. But let's go ahead and point that out on the graph. So let's take a look here. 1980, prices seem to basically kind of flatline themselves all the way through about 83 is what it said. 1990. Kind of flatlined at the beginning here, but we can see that housing prices are still on the rise. 2000, housing prices were still on the rise. And then we hit the Great Recession. Okay, so the Great Recession was really the only recession in the last 40 years that had affected home values. Okay, and why is that? Because basically of the subprime mortgage crisis. To really break this down with the Great Recession, everyone, is that, put it in a nutshell, mortgage companies were doing what they weren't supposed to be doing. Basically, they weren't checking your credit score. They weren't checking your incomes. They weren't checking any of this stuff. They literally just left it up to the mercy of somebody that came through the door and said, hey, I want a loan. Well, here you go. You can have your loan. I think that we all know that. We all remember, from years prior, what really kind of led into the Great Recession in itself. So again, there was just a lot of flaws that were happening and no regulation really monitoring what was going on in the subprime mortgages that were being issued out. Everything was being issued out hand over foot. So if you look at the recession, okay, of 1980, 1990, and 2000, they were for different reasons. And again, now finally, there was a recession that got created because the housing industry or the mortgage industry was doing stuff that they shouldn't have been doing. Ever since then, and during the Obama administration, came out the Frank-Dodd Act, or the Dodd-Frank Act, however you want to call it. And that was all consumer protections that were placed to make sure that subprime lending never happens again, or there's not going to be just predatory loans happening on a regular basis. So nowadays, mortgage lenders are required to check your credit scores. They're required to verify your incomes. They're required to verify everything and create up a whole package to be able to submit to make sure that they're not putting the overall economy back in jeopardy again. So again, are we going to, if a recession does hit coming up here, say in the near future, like the indicators are possibly showing, is the housing industry really going to be affected like what happened in the Great Recession of 2008? And the answer to that is simply no, with the regulations and everything in place at this point. So again, if you're a buyer and you're out there saying, well, this recession, hopefully it's going to go ahead and tank the home prices. That's probably not going to happen. I mean, I just don't see that happening because we just don't have the predatory loans and stuff like that. And there's too many now consumer protections in place to be able to prevent against that. So buyers, again, I just don't see that kind of coming down the road, or anybody that's making any kind of real estate speculation as to whether or not we're going to see the crash that we saw, the crash. Let's go ahead and throw out that term that we saw in 2008. Now, of course, I have said in prior videos, I do think that we will see a market correction, and that's simply going to be due to supply and demand. And again, throughout a lot of the videos that I have come up with, supply and demand is everything really in the real estate industry. Okay. And right now there is, especially right now here in the Treasure Valley in itself, supply again is at an all-time low. Demand is still there, but we're just going to have to watch and see how interest rates continue to tick up to combat inflation. Okay. And is it enough to be able to drive down some of the buyer demand that we're seeing for our area? I think that can happen, but if you, and I have predicted that it can happen, but if you're expecting, something to happen again, like in the Great Recession, I really, really would not bank on that. So let me go ahead and get to the final thoughts here right after this. All right, everybody. Hey, welcome back. Thank you so much. So let's go ahead and summarize this basically in my final thoughts. Of course, do I think that the indicators are showing that a recession is going to be on its way? Honestly, I do. I see a recession coming along this way. But the point that I want to try and make here to everyone, especially to buyers that are sitting on the fence about whether or not they want to purchase right now, is that if you take a look at all the prior recessions that we had up until the Great Recession, home values actually either plateaued themselves or even started coming up. If you look at the 80s, 90s, and early 2000s. Now, again, I do want to reiterate that the Great Recession was really because of predatory lending. There was no checks and balances to what was going on. And if you were around, and especially if you were you owned a home during the Great Recession, you understood that really that's what kind of led to it. And then really no regulation controlling anything that was going on. Now, looking into a possible 2022 or 2023 recession that might pop up, which a lot of people are thinking are likely, again, it's going to be for different reasons, not directly pointing at the home industry itself or at basically the real estate markets. So would I anticipate a crash of 2008? If that's what you're waiting for, are you going to see a crash that's going to bring home values back down to what you would consider an affordable level? I wouldn't anticipate that. Again, I have said it though in prior videos, again, real estate is all supply and demand related. Right now, the Treasure Valley, and still the Treasure Valley has really no supply out there, which you could have saw in Mikey's monthly mortgage update for the month of March, and our demand is still good. Will the interest rates get to a point to where they're going to raise significantly enough to drive away some of the buyer traffic? And honestly, I believe that's going to be there. But will it bolster inventory to the point to where sellers will have to make price reductions in order to compete, in order to sell their homes? I do anticipate that could be there. But if you're expecting, the values or home values to come down again significantly, like we saw back in the 2008 Great Recession due to the subprime mortgage crisis, it's just not going to be there. So I do anticipate a market correction. And then also, if we take a look at the median income that people are making here in the Treasure Valley as compared to the median home value, it is skewed. And that's going to also have to correct itself. And it will find its way probably in this market correction. So again, anticipate a correction, not a crash. So again, buyers, if you've been on the fence and you're looking to get out there into a home, now is a great time. It is a great time. And even the interest rates, even if they stay high or they get to a high level, eventually they're going to have to come back down, and they could come back down even lower than what the interest rates are right now. And you can go ahead and refinance. But right now is still a good window. 5%, even though it's jumped up a couple of points since the beginning of the year, 5% is still relatively manageable. So talk to your mortgage professional today, about that. If you're looking for a mortgage professional or you're looking to buy, feel free to reach out to me and we can discuss this a little bit further. Also, I just want to stress this. I am a realtor. I'm not an economist. So if you want to add something to this discussion, please comment below. Really, I would love to hear your thoughts. And even if there's something that I'm missing, different indicators or this or that, please comment below. Love to talk to you more about it. But again, I can be reached at area code 208-715-STAR. Again, that's 208-715-7827. And buyers, if you're looking to begin your shopping experience right now, please feel free to visit my website at www.yourstarrealtor.com. Also, don't forget to click on the subscribe button if you haven't. Click the notification bell too. Don't forget to comment below. And on top of that, if you're looking to make a relocation from out of state right here to the Treasure Valley, click in the description link, download my free relocation guide. That way you're in the know before you decide to make the move. Well, again, thank you very much, everybody, for taking the time out of your day to watch this video. I look forward to the day I speak with you. Look forward to the day I call you my neighbor. God bless. Until then, thank you so much. Bye-bye.